Then we had some big news from the company Netflix, which is taking over the streaming market still. So we saw in the past weeks or so that Disney came out with Disney Plus and they did really well on their earnings. They were like powering through at Disney Plus. We thought all that competition would hurt the other streaming companies, and then Netflix comes out here and reports their quarter. They had a great quarter ending 2020 with over 200 million subscribers, and they added 36.5 million in 2020, which is way above expectations. They usually only add 22.5 million subscribers annually. And just in this last quarter, they added 8.5 million subscribers, and the estimate was for 6 million. So you can see how much of a crazy beat that was. So it didn't really matter that they missed on their earnings a little bit. It just mattered that the subscriber count, which seems to be the main focus for analysts of the company now, they did really well on that measure. The earnings came in at $1.19 versus the $1.39 estimated. So that's where the miss was there. And revenue slightly beat. The stock was up 12%, or about $62 for the week, to $564.91. On the first day of the earnings, at one point, it was up like to $586, up like $84 on one day after the earnings announcement. They also gave some information about what's coming up on their platform, right? So looking at it, they have about 500 shows and movies in post-production ready to launch on the platform. So they said every single week of the year in 2021, that's every week, not month. I thought at first it was month. They're going to have a new movie every week of 2021. That's pretty incredible right there, just to have that much content coming out. I mean, can you even find time to be able to consume that many movies if you have a subscription to Netflix? I don't know. I guess we're going to find out. And I guess all that spending for them on these new productions, on these new movies, that's what's caused the rates to go up from $14, from $13 to $14, and from $17 to $18 for their higher end ones. They're raising the cost of the subscription. And I mean, that's the price for trying to make this crazy content that they're doing. Separate from that, they also said because of this increase in subscribers, they may be able to finance their day-to-day operations with the money that they're already generating. They had been burning, up to $1 billion, I think it was, in 2020, creating all of this content. That kind of creates a cash flow problem. They have to get financing from elsewhere. They might not need to do it anymore. Just another good sign for the company. Then we have 3D Systems, which is a 3D printing company. The stock is up 22.05% on the week after it was included in this new ARC Disruptive Innovation Fund. And that ARC fund is from Cathy, who everybody loves because they think she's the next Warren Buffett, because she predicted, she said Tesla was going to go way up to the $4,000 price level. And then, Tesla stock shot up 1,000%. So now everybody loves her and people want to invest in the funds that she's doing and the stocks that are in those funds. 3D Systems is one of those stocks that was in this Disruptive Innovators Fund, right? So I also think that this 3D printing is part of this kind of wave of the future that's coming on. They also had good earnings report on top of this, so everything drove that up, right? So you have the big waves of the future, though. You have genome editing, you have space exploration, you have blockchain, you have these kind of what was the other one? The 3D printing can be used for a lot of different things. Oh, and then space exploration. Virgin Orbit actually launched their first space satellite. So this was huge news because they do it differently than SpaceX and Blue Origins. And what they do is they fly a vehicle up into the upper atmosphere, and then they launch their rocket from there into space. So that can save a lot of money because if they're in the upper atmosphere already, they don't have to pay for all that fuel to launch from the ground up into the atmosphere and then into space. So the idea is that this should be a lot of cost savings, right? And once again, this is positive news for space exploration. We're seeing this kind of innovation coming in, and we're seeing the cost coming down, and that's going to enable more things and more science to be done in the future. So they're pushing these companies like Virgin Orbit, they're pushing all these old aeronautics companies, out of the way. They're like, make room for us because we're taking over. And Boeing tried to launch their Starliner spacecraft, and it just had a bunch of faulty designs, the software errors, and then it even had cost overruns on top of that. So it was just a mess all around for Boeing's flagship kind of Starliner here. And Boeing has been just a mess all around as well, because we talked about in previous videos how they had all the problems where they fell behind with Airbus taking the lead. Then they had all of their planes grounded with all of their software issues. They're getting investigated by the federal government for that whole issue with that. And it was just rough times for Boeing to see if they can pull back here. Speaking of like the planes, now we have United Airlines had a $1.9 billion quarterly loss. So we're still keeping track of that and how much these companies are losing. Then we have the new tax framework. So people making over $400,000 a year, they might have their tax increases. And they were also talking about raising the taxes on corporations from 21%, which it was cut to 28%. Before it was 35%. 28% is still higher than a lot of European countries, so that's still pretty significant. So that's some tough stuff going on to the kind of businesses that are trying to do really well here in this strange environment. They're also talking about raising the minimum wage, which is a labor cost for companies. So there's a lot of items there that, depending on how this plays out and what gets voted in and what doesn't, it could change the dynamic for everything right here. Then we had the jobless claims. They came in at 900,000 in the past week, which is way high. It's down from before that a little bit, but it's still way too high. 900, we used to have 250,000 would be normal in a normal time, and now you see this. Not to mention, the Federal Reserve is trying to save everything by printing all this money. Their balance sheet got to $7.4 trillion now. A year ago, it was at $4.1 trillion. So where did that extra $3.3 trillion go? I mean, that had to flood somewhere. Maybe it all flooded into financial markets. I don't know. Or maybe it went into something like people getting easy money and then buying Gamestop stock, which we had talked about in previous weeks. So Gamestop has this crazy short squeeze, and it punched higher all last week. Then, it's been up over 220% in 1 month. That's pretty incredible by itself. This company went public in 2002, and people are thinking of it now as the next Blockbuster. Like, there's no way they can survive. Their whole business model's doomed. Then they had the short squeeze that we talked about in the other video. And again, people on Reddit and social media companies, they all go and they're jumping on this bandwagon of basically forcing the price to rise by all coming in and buying the stock. So this is evidence to a lot of analysts that say that it's basically a bubble forming in certain segments of the market. And the whole thing with the Federal Reserve adding liquidity to the market, interest rates near zero, the whole COVID-19 relief plans, all this stuff is helping to push these speculative investments up. GameStop, they had a powerful run due to the lockdowns and a lot of people playing video games. So they were actually coming back a little bit on that. And in its current surge, I think it went up over 66% in August. And this one now, it's gone up even more than that. Actually, on January 22nd, they halted trading in GameStop because it was up 70%. 70% in another short squeeze. So these are people that they're borrowing the stock to sell it short. And when the stock keeps going up, they get a margin call on the phone and they have to cover it. And when they're covering it, that's causing the stock to go up. With all these buyers out there, it's kind of crazy. It's a lot of fun to watch this kind of stuff, but I really hope that anybody that's a regular investor that's in this is going to get out or take some profits, because it's kind of separated itself from reality at this point. I mean, is that company really going to make the earnings and do well in the future? Then we have the European Central Bank, which is keeping their official interest rate at negative 0.5%. That's right, negative 0.5%. You're guaranteed to lose money if you buy their bonds. So why would, that situation ever arise? Like, how would anybody pay money to lose money, basically? So might have something to do with them buying $2.25 trillion of their own European bonds. European Central Bank is buying Euro bonds to keep rates down. So maybe that's messing up the market. And then we have Ford stock, which has been doing very well lately. It's over $11 a share, $11.52 now. Well, have you seen the commercials for the Ford Mach E Mustang? So it's kind of crazy here that all of these old school companies, Ford and GM, their stocks have been performing really well. We talked about GM earlier, but look at now, they're having commercials for these EV vehicles, even though they're a little bit late to the party. So it's also funny that Mustang has nothing to do with this new EV. They basically took that branding and just smacked it onto the new car just so that they could get the marketing power of the Mustang brand behind it, right? So that's one marketing strategy, I guess. But it seems to be working. You know, they're doing really well, and there's a lot of good reviews about the new the Mach E Mustang. So Ford stock is actually up 31% since January, and GM was up, I think, 32%. So you're seeing not just Tesla, but these other car companies are also now starting to do really well. So it's interesting watching the stock price movements. Then we have Inflation Watch. That's kind of like Baywatch without any of the good stuff. So looking at palm oil this time, we talk about these commodities every week. It seems like there's a new commodity. Palm oil just reached $961 a metric ton. So that's actually the highest it's been. It's right around, hovering around the high for the past 10 years. That's a pretty significant milestone there. So labor shortages in Malaysia and Indonesia because of the lockdowns during the pandemic kind of helped add to this whole issue with the price going up so much for palm oil. These two areas account for 84% of the palm oil, the global production of palm oil. So that's why it's having such a crazy effect here. And I was wondering this when the pandemic first started. I was like, was there going to be, you know, very specific shortages in different items when they do these lockdowns and people aren't allowed to go to work? Not even that they don't want to, or they, you know, maybe is shorter, but now they're not even allowed to go. So it seemed like it was going pretty well for a while, but now we're, what is this, like 9 months into the lockdowns, and we're starting to see these commodities going up in price. You're also seeing a lot of the metals, the prices go up because the mines were closed. So we have to keep watching this and watch it as it continues. And it's yet again another point where we have inflation showing up. Then let's take a look at the overall market, S&P 500, which is up over 70% from the lows in March 2020. Pretty crazy right there. But now when you're looking at it in terms of PE, it's trading at 22.65 times the projected earnings. This is about, you know, a pretty high number. I mean, I think the average for the past 5 years was 17.84 times earnings, and I think the longer-term average is even lower than that, like at 15 or 16. And there's a lot riding on the entire world coming back to normal in 2021, and we don't really know if that's going to happen. So far, like the earnings for the S&P 500 companies are projected to have fallen 6.4% in Q4. In the second quarter of 2020, though, that was a terrible time. It was actually down 32% for the company's earnings in the S&P 500. So being down a little bit in the fourth quarter is not that bad. Since Election Day, the best performing sector was actually energy, up 48.1% since the election. Then you have the financials that were up 24.4%. Then you have technology, which was up 16.4%, which overall on a longer term here, technology has been doing really well. The overall S&P 500 was up 14.3%. If you're looking at an earnings rate here and like how the companies are doing, actually reporting earnings, 88% of the companies reported better than expected earnings in the fourth quarter. So that's really good right now when you're seeing that. And we're trying to set up for a nice 2021. So let's end it on the good news there, hearing the good earnings reports coming out. And let's just keep positive for the future and hoping that the earnings and the economy will really recover in 2021, or at least get on the right track for the future. Thanks for watching, everyone. This is Andrew with Spark Finance. Tune in next week for all of your business news.